Welcome everyone to the 6th annual conference on fintech and digital innovation, hosted by Afore. As Nick said, my name is Kirsten Winters. I'm Managing Director and Chief Risk Officer at Ostra, which is the new home of MarketServe, Triana, TriOptima and Reset, and is owned by IHS Markit and CMU Group. I'm very pleased to be able to participate again at this year's conference, and I'll be moderating this panel on tokenisation and digital solutions for an effective CMU. I'm very much looking forward to spending the next 55 minutes or so discussing this interesting area with an extremely varied and esteemed group of fellow panelists. So to start with, I'll kick us off with a quick introduction of each panelist. We've got Lucas Repper, Senior Policy Officer, Digital Innovation and Blockchain Unit at DG Connect in the European Commission. We've got Morten Beck, Centre Head based in Switzerland for the BIS Innovation Hub. We've got Andrej Kavarik, who's an MEP. Andrej is a Czech member of the European Parliament, sitting in the Renew Europe political group, and he is a member of the Econ Committee, and in that capacity is the chairman of the Working Group for Access to Finance for SMEs. We have Paul Marley, who's Global Head of Security Services and Regional Head of the Corporate Bank in the UK and Ireland for Deutsche Bank. And we've got Bjorn Storim, who's European CEO of BNY Mellon. And I'll start off by extending a warm welcome to you all. So we'll get started on what is a very interesting topic. And I think we'll probably start off with sharing, each of the panelists sharing their view on where we are today. Beyond pilot projects and exploratory work, has the use of technologies begun to transform the wholesale securities markets in Europe? And with that, shall we start with Morten?
Yeah, thank you. And can you hear me?
Yes.
Yeah. Okay. Thank you very much, and thank you for the kind invitation. I really appreciate it, and it's an honor to be on this panel. So let me just try and approach the question a little bit from a European, but specifically a Swiss perspective on what's going on. So the question is, yes, I think so. But just a little bit of background, I think Switzerland is actually leading in what you can call tokenization or adoption of DLT and blockchain, and implementing that in different areas of the financial markets. So I think a couple of observations, right? In Switzerland, they like to talk about crypto nation, and they have this crypto valley centered around Zug, which I think is really an leading innovation cluster. There's a early work on Ethereum was done there. There's a very active DeFi scene, but they're also seeing these more like regulated DeFi or crypto companies come abroad. There's now 2 licensed crypto banks and even like a licensed security house. And one of these crypto banks has tokenized shares in Picasso paintings. So there's a lot going on. Also there, I think they moved very early on the legal and regulatory framework around tokenization. So there's 2 examples. FINMA, so the Swiss regulatory authorities issued this clear guidelines and around what was very popular at the time, ICOs, but that had this very nice taxonomy of different types of tokens, payment token, utility tokens, and also asset tokens. And then there's this whole new Swiss DLT Act or blockchain law that really tries to provide like a sound legal framework about crypto commerce or and so on and so forth. And I think that's really important. But really coming to your question, I think the thing that might be putting Switzerland slightly ahead of other jurisdictions is the fact that there is actually now a live trading platform, and it is a centralized security depositories for tokenized assets. This is known as the SIX Digital Exchange. It has its first issuance, bond issuance on it. It's still very, very early days, but I do think that has actually already happened. People are using the technology, and SIX is obviously a big player in the Swiss market. So some of these trends has actually led the BIS Innovation Hub and the SNB to try and explore how to make central bank money available for this new ecosystem. And it's something that we're still working on. But basically, we have worked on, if SDX were to become sizable and interesting, how could could one settle in central bank money on that system. And that's the pictures that you can see behind me. That's our project Helvetia. And in that project, we basically did two things. We connected like the SDX platform to the existing Swiss RTGS system, and also the SNB in the test environment actually issued what is known as a token or a wholesale CBDC, a liability on the Swiss central bank that was then used for settlement of these tokenized assets. So I think a lot is going on. It's still early days, but I think around the world you're seeing similar trends. Back to you, Kristen.
Thanks, Morten. So Paul, from your perspective at DB, I mean, where are we?
Well, I think, this is obviously a European panel. I think we're actually at a tipping point. I've been working on this topic, I think, for 9 years. I never would have originally anticipated it would have taken this long to kind of get to an inflection point where adoption just seems almost inevitable at this point. But I think as far as furthering, the original objectives of CMU, the introduction of, distributed ledger technology and tokenized assets can do a lot in order to be able to, to further those objectives. A big part of that, of course, is because it allows us to start afresh. If we look as as an important recent benchmark, and as you said at the beginning, I manage the security services business at DB. So if we look at the way that T2S was rolled out in order to be able to bring harmonization between CSDs, right, and also, as Morten was just saying, actually allow you to settle using central bank money, that required a certain amount of standardization around actions, around events, and around data harmonization. So if we can capture some of those principles, but do it in a way where we're starting with almost a clean slate, but in a way where we don't end up inheriting the complexity of the past, then I think there is a new world waiting for us.
Thanks, Paul, for that. And next, I think Lucas. You've heard a couple of. Let's go. Lucas, you've heard sort of Paul's reaction there. What are your thoughts?
Thank you very much for having me. And I should add at the very beginning that all my views are, of course, my personal views and do not represent the position of the European Commission. I think both statements are very interesting because they recognize that indeed distributed ledger technologies are coming to an inflection point where they can make quite a difference in capital markets. And we've seen that a number of leading banking groups in Europe have been piloting and testing distributed ledger technologies for wholesale bank purposes, for capital markets, for trading and post-trading. And we know fairly well the advantages of atomic swaps meanwhile and what it means for counterparty risks, but it hasn't really broken through. But we are now at this inflection point, and it's so exciting to see how a technology finally then takes ground. I think the link that has been made to central bank digital currency is very interesting. You know that the European Central Bank is working in cooperation with the European Commission, with us, on a project that's called the Digital Euro project, where there is also this potential to leverage innovative solutions in the area of distributed ledger technologies, which could lead to the settlement. I think zooming out a little bit, what is so interesting about blockchain technologies, beyond the hype, I think that Verena has very much also seen as a risk for retail investors, but beyond the hype, the really interesting element of blockchain is this potential to take out middlemen where it is inefficient. It can be efficient to have middlemen. It can be necessary for market security and stability. It can also be inefficient, and in particular in the area of money remittance, there are enormous efficiencies that could be gained. And of course, the hope is that Europe would be among the leading nations that capitalizes on distributed ledger technologies with central bank digital currencies to garner these efficiencies. So from us, from a Commission perspective, it remains a fascinating market that we follow closely and that we try to support with regulatory means, as we can discuss later. Thank you.
And Bjorn, how is digitization impacting BNY Mellon?
Thank you, Kirsten, and thanks first of all for having me on this panel. It's really a pleasure to be here. how is it important? How is it impacting us, and why is it important to us? I guess the answer is twofold, I would think. Number one, we have a very specific business model, a very focused business model, right? I mean, what we do well, we feel, and we do that and only that. Yeah, so it's not being everything to everyone. And as the world's largest custodian, the digitalization is really the core of our issue. Think about it. What we have done is we combined across lines of business, across all the corporate functions, we have combined global operations and technology into one. That's telling in itself. Yeah, global operations and technology, and the amount of employees working in the global operations and technology team is just more than 50% of the entire bank. So it's by far the largest, right, of any of the corporate functions and lines of businesses that we have. We have 50,000, roundabout, just shy of 50,000 employees globally. So ops and tech in a combined fashion is super important for us. And combine that with a pretty narrowly defined and very specific business model that gives us a very large lever when it comes to digitalization. Everyone would be saying, digitalization, if it is important, of course it is. And I would share, Paul Malley's view on the tipping point where we currently are. For us, it's probably amplified because global ops and tech is so important, and it's so much at the core of that, of what we do. So not surprisingly, I think for us, digitizing this very bank in that market for our clients is really our mantra. So it's extremely important, right? We see by and large, three opportunities of the digitalization and then the digital technologies, including DLT more specifically. The first one would be it's enlarging the scope. Yeah, new types of assets, new types of issuers, investors coming to market, and DLT helping on that. Secondly, it's facilitating the access to the market infrastructure. It makes it easier. Yeah, so it makes it larger and it makes it easier at the same time. And then overall, and that's going to be very interesting for us as the largest custodian, it's improving the information storage and transactions and the transmissions in the system. So for us, it's a key thing, maybe more than for others, but I would share the view of my the other speakers beforehand. We are really at a tipping point where it becomes important for everyone in the Capital Markets Union in Europe. Thank you.
Thanks, that's a very interesting perspective. Andre, so I want to get your thoughts, but probably particularly in relation to the current work you've been doing on regulation of markets in crypto assets, or RICA. Perhaps you could share your thoughts in that context.
Thank you, and thank you for inviting me to this panel discussing, I think, this very interesting topic. I think maybe to follow up on what has been already said, definitely the transformation is happening. That there are changes that are quite visible, new models that appear, and obviously the technology, especially the DLT, but I think that there's broader scope of technologies, being also use of artificial intelligence in some areas and others. Is imprinted in the way the market is organized now. And you mentioned. So basically, the idea is actually as the changes are happening and taking place right now, we have to also be able to react in terms of regulatory or public policy work, and this is what we are currently doing. The Commission has proposed the digital finance package some time ago, and I'm pretty sure also this together with the CMU activities, but also I think the upcoming issues regarding the retail investment and other proposals, we can actually have quite a robust public policy strategy in this regard. I think on one hand, and this is something that in my view is actually a step forward to help actually to create and also create opportunities for innovation, but also to create some better regulatory cooperation is the proposal on DLT pilot regime that has already been concluded. I think specifically also discussing issues, for example, like issuance of shares or bonds, in terms of facilitating or completing the options in terms of access to finance for companies. I think this is an important step. This has been basically done, and the regulation establishing the pilot regime is concluded, and I'll be happy actually to see some concrete projects that will use this regulatory framework to take place and see what are the real benefits for business operators. And the second thing, as you mentioned, the markets and crypto assets regulation, MiCA proposal, trying to set a new regulatory framework for crypto assets, but not only for crypto assets as such, but also for those who are actually issuing, offering, or providing services with relation with crypto assets. And I think this could be from the regulatory point of view, this addition that can actually accompany the development in the market. Also, and this is, I think, how we view it also in the European Parliament, sort of prepare for the introduction and launch of the digital central bank currencies, which will obviously also be available at some point. And actually to clarify, let's say, the principles that we would like to see being respected within the market in terms of use of crypto assets and use of technology as such, not only in terms of crypto assets, but the technology in general. So yeah, I think this is something that we are trying to sort of keep the pace with. Obviously, it's not always easy, but I think very special part in that would be also to see whether the supervisory framework, as it said, actually fits to the use and more broader use of technology as we will discuss. And I think this is also one of the issues that we should not avoid.
Thanks. Yeah, no, definitely we'll get to that. So just thinking, a couple of you did mention CMU actually, but in terms of CMU specifically, how do we think these new technologies are going to enable that better integration across the whole EU capital market? I don't know, Morten, shall we maybe kick off with you?
Yeah, I think the potential is huge actually, and I think in to some extent I think the future is in principle already here. So we did another experiment actually with Banque de France where we issued a French commercial paper tokenized, sold it to a Swiss bank, then that Swiss bank in a secondary market transaction sold that on to another Swiss bank that ultimately then redeemed the tokenized commercial paper with the issuing French bank. Everything was settled using wholesale central bank digital currencies, either in euros or Swiss francs, and banks were adjusting their positions of wholesale CBDC, as we call it, using FX transactions that were settled using payments versus payments. So all these things are, in principle, using existing systems and regulations possible today. So I think the potential is definitely there, and it's just going to take experimentation and perhaps a little bit of courage to do all those things. But I really like Paul's point, and that what really hopefully you can save on is on the complexity of get rid of the complexity of the past. However, I think it's important to realize that evolution and innovation is often incremental, so it's not going to be a big bang. So these new tokenized platforms are going to coexist with existing legacy system, and how you connect and integrate all that's going to be quite complex, but I'm sure Bjorn is an expert on how to do that. So I think we're in good hands. Thank you.
Well, maybe I should go to Bjorn next then. So I guess, can you sort of elaborate a bit further on how tokenization and digital solutions in the context of CMU is relevant for BNY Mellon? I mean, you did cover more broadly earlier, but particularly in relation to CMU.
So not only wins Morten the prize for the nicest background, he also puts me on the spot, right? But Thanks. No, happy to comment. I mean, I think we would probably look at two parts of that approach, of that question, right? That the one would be the tokenization initiatives themselves, and we've spoken about that. That would be the native digital assets, and the second one would be how we tie that into the quote unquote inefficient traditional processes, and Paul mentioned those. Ideally, we would like to top them over, right? But digitalization will not happen in a vacuum in itself and on a standalone basis. It will have to be tied in the capital markets union as it is existent, and in the structure, the environment, the legal, the regulatory, the fiscal rules in existing markets and markets infrastructure, and the lack of progress in the traditional environment, I would think, hinders also not only the integration in the traditional market, but also the digitalization of the other markets. What I mean by that is there's probably the best example would be in the fiscal arena, in the tax arena, the harmonization on the approach and tax questions. Think of taxation at source across 27 jurisdictions. That the harmonization of that project in itself, which seems a traditional effort, would make it so much easier for us and for others, to come together and drive the digital progress when it comes to taxation. That's probably the best example, and we've spoken about it in this very conference in other panels. So it's encouraging to see that there is movement and there is the desire to move forward. I guess that's I think the most important one.
Thanks, Bjorn. And so, Andre, I mean, so can you respond to that maybe, and maybe also think about it in the context of sort of the work on sustainability as well? Like, what's your response?
Yeah, I would follow up on what has been said in terms of opportunities provided by technologies, especially in the context of developing the CMU. I think, I mean, these are, let's say, the trends that are sort of converging together and helping to maybe solve some of the problems that we are currently dealing with in terms of CMU. And obviously there will be some discussions that, and I think Björn alluded to them perfectly. There always are issues where we will have troubles in really achieving something tangible, so that the CMU is fully up and running. In terms of, we still have issues regarding reporting, insolvency, tax issues, many of that. But I truly believe that on one hand, the introduction of digital technologies can actually enhance, and I think it was mentioned by one of the speakers in the first round, that now we have actually broader market, more let's say more opportunities through the digital technologies. And I think this is something that should be actually used for the benefit of companies, but also of retail investors, if, for instance, because those would be a huge part of the, let's say, success, possible success of the CMU. So I think it can actually help to deal and cope and maybe dismantle some of the obstacles and barriers that we currently have when we speak about cross-border access and cross-border market. And that's let's say that's the potential of the technology. If it really takes place, this is about the regulation and also the supervision. If we set the regulatory framework in a way that is actually covering in Europe the entire 27 member states, the single market, then it can actually really tap into its potential. If we really keep some of the administrative and regulatory barriers that we still have, especially, and I think we know all some cases of some member states gold plating some of the legislation that is in place, definitely harming the development of cross-border activities and cross-border business, then obviously we can actually have some issues. But I think, as I mentioned at the beginning in the first place, working on regulations on the EU level that are actually entering sort of uncharted territory of use of DLT technology and others. I think this is something that can actually help to provide these needed harmonized approach also across the EU, and actually use that potential and help the CMU actually achieving a later stage of completion, if not its full completion at some point.
Yeah, thank you. And Paul, I mean, specifically in the context of CMU, your thoughts?
Oh no, thank you. I felt grateful that Martin picked Bjorn before me earlier, so he's definitely got the tougher question. But look, the CMU's objectives are very broad, right? And I think even referring back to Verina's keynote just before this session, right? You heard how much she talked about investor protection. She talked about treatment of clients, particularly retail clients. And that's something that, we as banks, obviously, whether or not it's Deutsche Bank or Bank of New York, as a already, substantially regulated institution, we want to do that in the right way. And we want to be able to invest in these new technologies to deliver these new services to all flavors of clients, right, in the right way. So regulatory certainty is super important. The second point I would make is that and Andre mentioned earlier, right, the DLT pilot regime, and of course we have the EU digital finance package as well. Right now, Europe has a genuine advantage, right, in being able to provide the framework and the regulatory guardrails by which these types of services on these new technologies will be able to reach maturity, therefore be able to reach, a much broader investor community, and then subsequently, of course, be able to help achieve the overall objectives of the CMU, which of course are themselves like very, very broad. Now, it's therefore key that we have a level playing field, because obviously banks want to be part of that journey. So one of the things I would specifically ask for is not the fact that there isn't, very, very specific and tough regulation that holds everyone to account, only that they're applied to all the institutions that are developing these kind of services in a similar manner. And obviously, I say that in a way so that, banks can bring, hopefully over time, their customer community, into this arena. So I think Europe has that lead. Let's not give it away. And then both Morten and Bjorn have referred to something else that's super important, of course, right, which is the interoperability between the old world and the new world, right? In the example that Morten was describing, right, there was almost like half the processes happened on the distributed ledger, and then obviously the other part had to happen on the regular cash rails. So how the actual two ecosystems intersect, like how one defines, and I think it was Lucas who was mentioning, right, the settlement finality of an atomic swap, right? Well, the legal definition of that is actually quite hard to do, right? Because it happens in, right now in an asynchronous way. So I think we need to muddle through all of that together, but do it quickly and with a level of certainty so that Europe doesn't, lose pace, where we're at the moment, we have a structural advantage. Back to you, Kirsten.
Thanks, Paul. That's great. Lucas, anything to add on CMU? Give you the final word on CMU, as it were.
I will try to add. It has been very exhaustive what the panel has already discussed, but I'll try to add. I think what is really fascinating about the possibility to tokenize assets is going potentially beyond the efficiencies that we would create with atomic swaps and with using DLT for the settlement and post-settlement of securities as we know them. It's the use of distributed ledger technologies for completely new asset classes that we don't know yet today. And I'm talking about the tokenization of assets that we cannot touch, virtual assets that will be created in an internet that is hard to conceive for us today, that in 10 years will look very different from what we know the internet looks like today. And I mean, just to use one of the buzzwords that are now flying around is the metaverse. So the idea that a completely new gaming environment will be created for adults to buy real estate in the internet, to buy art in the internet, and to use tokens to do that. That will be enormous capital as well. So once you create this infrastructure and the cash settlement on a distributed ledger, once that infrastructure is there, once it's in a regulated environment, you have a basis to take the next step and then to look for how you can use the tokenization and this model of tokenization, this regulated model of tokenization, also for completely new forms of assets. And that we find are very, very exciting. One word on interoperability. It is on the radar screen of the European Central Bank. It is also on the radar screen of national central banks. You may have heard that Germany's Bundesbank has done a very interesting experiment a year ago by combining the DIBS Target 2 real-time cross-settlement system with the distributed ledger. It was this trigger solution that they developed to cash settle a DLT transaction on our current Target 2 cash settlement system. So these discussions are ongoing. I think they will step up. We also need to do more about interoperability of blockchain solutions together, because at the moment we do not have one blockchain solution. We have different blockchain protocols with smart contracts, and some of them scale better than others, and some may be much bigger than those that we know today in 2-3 years. But are they interoperable? Only if they're interoperable, we can really garner the efficiencies. And my question then to the banking sector would be, what can the banks do to facilitate and accelerate this? Because at the moment, we regulators, we the Commission, talk to the startups, but there's somebody missing in this equation to help us create interoperability, which is the banking sector.
Thanks, Lucas. So, Paul, maybe we can come back to you on the kind of next point, which is, and I think we've touched on it briefly, but maybe we dig a bit deeper on the regulatory impediments, and maybe pick out the key things that you think from a regulatory perspective we could get to kind of speed up this adoption.
No, thank you. I mean, I think I've already, as you mentioned a couple of them, of course, particularly around the level playing field, and I like Lucas's idea of helping the banks provide that channel, right? I don't know what the right phrase is, like the middleware between maybe the old world and the new world. I mean, I think it would, just to make this discussion complete, clearly we have to talk about, capital charges, right? There's been, a lot of discussion around that in the industry already. Some papers put together, replying to the Basel Committee's original proposal around capital rules, which of course would be, particularly prohibitive for banks to be able to, participate in a kind of, specifically the cryptocurrency regime. And that's why I think it is also important to kind of slightly bifurcate between, cryptocurrencies as, let's call it, an emerging asset class, right, and the adoption of the technology, right, and those things can be quite distinct. Clearly, traditionally speaking, we regulate financial products, right? We don't generally regulate technology, and at this point, right, we've come up with a solutions where the borders between those things become much closer together, right? And therefore, like, bifurcating between the two becomes significantly harder. But that's another reason why I mentioned, obviously, a level playing field, so that hopefully, banks can be a provider and a useful servant, right, to our clients in being able to, to kind of bridge the gap. And then the second element, I obviously also mentioned regulatory certainty already. And certain member states, of course, have gone a little bit further, right, interpretation of the rules, right? I'm actually sat in Frankfurt right now. The German, electronic securities law includes, certain provisions around making tokenized securities, actually fungible, so that they can move between systems. The fact that transactions can actually be reversed. The fact that, you can have life cycle events and source code that's observable to stakeholders that would obviously want to know how smart contracts actually operate. I think those kind of rules, those kind of clear indicators, make it easier for folk like Bjorn and myself to come up with the investable business cases, right, that we can then obviously bring to our management teams, and then create the these new services of the future. So like I said in the previous segment, we are ahead, and I think therefore, the pace of change will only accelerate from here. Let's not give away that advantage by slowing down now.
Thank you. And I guess, you know, from your perspective, Bjorn, how do you see legislative, hard for me to say, initiatives in this space, and how that's helping or hindering the digitization efforts?
It's super important. It needs to go hand in hand, right? We will not do something in the vacuum space, and for us, even given our B2B business model, we will not do that, right? It has to tie in. We heard Verena speak beforehand on retail protection. That's even a more complicated area, but also in the B2B space, we will not do something that doesn't tie in with the regulatory and legal frame, of course, right? Therefore, the regulatory and legal clarity that I spoke of earlier is super important. I can only echo what Paul said. So we were, just as one example, we were of course excited, I shall say. Yeah, we were excited about the pilot regime coming up, and this went above and beyond just the regulatory frame. It's EU wide. It's not national. It's not only regulatory. It's legislative. And of course, now the devil is in the detail. We fully got the finite lifetime, the 3 years. We fully got also the cap, and you can debate at length whether the 6 billion cap is, too small for wholesale. It probably is, but we fully get where it came from, and that you can't have, a parallel market, humongously large, that is than in the pilot regime. That's why it's a pilot regime. We fully get that. I think for us, the really important question, and that would be a process of market participants like us and Paul and the likes, and ourselves, plus regulators, plus politicians. The important question on the pilot regime is that we drive it forward and use these 3 years intelligently. So I think we would be doing ourselves not a favor, and the entire CMU not a favor, if we reassess in 2 years, 9 months from now where it got us to. Right? This is an ongoing process. We need to see, after 6 months, after 12 months, 18 months, what use we made, we as the industry, what use we made of the pilot regime, and then where does it take us to? Because there's no use if you hit the wall after 3 years, and we all learned a lot. But to Paul's point, what's the economic viability of the use case to be carried forward after these 3 years? So it's key that we use that time wisely, I think.
Agreed, thank you. And Lucas, as I understand it, you did quite a lot of work in 2018 and 2020 fintech strategies, specifically on regulatory impediments. So we'd be really interested in kind of your view on what you see those impediments as, and how perhaps we remove some of them.
I think, first of all, to be clear, I was involved only as of the 2020 financial services strategy. I think we went very fine in consulting the banks, the financial service providers, the users. There was very extensive public consultations that preceded both fintech strategies of 2018 of 2020 in particular. And the 2020 financial strategy was already very much influenced, of course, by distributed ledger technologies. Imagine that around the time Facebook was getting ready to issue the DM cryptocurrency, announcing it as the new global currency that will disrupt everything. Probably not such a smart communication move. And then we had the COVID crisis, of course, which really showed that the future of banking is digital. I think there can no longer be any doubts about that. So the COVID crisis plus Facebook have very much influenced, I would say, the 2020 strategy. And if you look at it beyond the cybersecurity measures that we are taking with the DORA regulation, it is very much about the pilot and about the crypto assets market regulation. And the obstacles that we found are obstacles that derive from the fragmentation of the European Union. I mean, it's nothing new to any of the gentlemen on the panel. We have 27 member states with 27 national legislators. In the area of securities, already the definition of financial instrument is not fully harmonized in the European Union. Therefore, we had the situation of a fragmented landscape when it came to crypto assets and digital assets. Every member state, every regulator had a bit of a different interpretation, which exposed our innovators. So for us, I'm working in DG Connect. For us, from an innovation perspective, that posed a huge problem, because if you're a startup in Denmark and you discuss with your Danish financial supervisor whether the issuing of a utility token qualifies as a financial instrument or not, and the Danish regulator says, don't worry, it's not a financial instrument, but then you sell it to a German investor and BaFin gets after you because in their reading it is a financial instrument, of course, then innovation cannot scale in Europe. This is why we have so much supported from the very beginning the initiative to harmonize and to have one standard and one-stop shop and the European passport principle for issuing crypto digital assets in the European Union. And that is an important impediment. But I think we have to look beyond financial regulations when we talk about distributed ledger technologies. Distributed ledger technologies are decentralized technologies. And a lot of our data-related regulation that we have in place today, in particular the GDPR, for instance, was a regulation that was written with certain problems in mind that at the time resulted from centralized database solutions. So you had a clear regulatory access point that you can go after, whereas in distributed ledger technologies, you have a network of nodes very often, you have consortia, it's much more difficult to apply this. So the regulatory impediments that you find in distributed ledger technologies beyond the crypto asset regulation are very much related to how do we apply existing legislation to fully decentralized settings? Where do we identify regulatory access points? Who are the players we make responsible? Just to say one last word, we had a call with Hester Pierce from the Securities and Exchange Commission recently, and the SEC is struggling with this concept of whom do we make responsible in fully decentralized cryptocurrency exchanges, DAOs, right? So who is there the regulatory access point? Is it the group of the coders that sit together and develop the smart contract that runs a protocol, or does it go beyond? So the SEC is in the process of clarifying that with guidance. These are all regulatory questions we also have in Europe, which are partially clarified today, but there will be further questions coming up after the 2020 digital strategy. And this will be an area where further legal guidance is needed. That's why, last word, regulatory sandboxes and close cooperation with financial regulators in this space will remain fundamentally important for innovation. And that's why we also plan to launch a pan-European regulatory sandbox by the Commission after this summer.
Thank you. That's very interesting. Morten, do you have anything to add on from a regulatory impediments perspective?
Well, so very briefly, I just wanted to highlight, I think, central bank access and central bank access policy is going to be very important if and when we go to wholesale central bank digital currencies. Are you going to allow non-banks to hold these tokens? And are you going to allow foreign institutions to hold these tokens, right? And now, central bank access usually require that you are domiciled in the jurisdiction of the central bank. So there are, and for good regulatory reasons, but I think, you know, these distributed technologies would really thrive for easy access from everywhere, subject to appropriate regulatory constraints. But so I think access policy is going to come back big time.
Thank you. Yeah, and we've got about 10, 12 minutes left. So if anyone's got any questions, you can post Q&A and I can obviously address them to the panel, but we'll try and cover a couple more topics before we finish. So probably next I'll move on to my favorite topic, which is international harmonization and cross-border. You know, in many contexts, it becomes the one of the more interesting and challenging topics. So I mean, I guess the question is, you know, how do we ensure legal certainty in a cross-border context? And, you know, in which areas do we think we benefit most from international regulatory consistency? Paul, shall we start with you?
Well, okay, so you'll have to forgive me, Kirsten, because I don't want to actually give the same question twice, right? Because that's why I was mentioning before that like certain member states had already like started to write new rules. I mean, but if we talk about maybe, you know, the cross-border elements that are not necessarily, of course, inside the EU, but on an international level,
Yes.
and then we can take the point that, you know, was just being made regarding what the SEC is doing, right? I mean, if I can just make a quick comment on that, and I had the benefit of being an American citizen and having lived there for a long time, so I know a little bit about US securities legislation. But if we go back to the Act of 33 and the Act of 34, and they were written in those years in the previous century, right, which shows how old they are, right? But the definition of a security is actually really clear. And one of the things, of course, that's been is muddied the waters with the idea of these kind of like, you know, distributed asset organizations is what they're doing really a security? Well, if it matches the security definitions that are obviously in those acts, then the answer, of course, would be yes. And then you're obviously caught by all of those all of the different, regulatory implications that come with that in terms of course, how you issue a prospectus, right? And then you obviously move towards, being a listed security. To use maybe an analogy that's a little bit closer to home, and I obviously already brought up T2S right at the beginning of the conversation. But one of the regulations, of course, that we have in Europe is that any publicly listed security must be registered with a CSD. And that, of course, means that, if we have distributed ledger type technologies which aren't listed on CSDs that look like a security, then of course, then you're entering the realm of private markets. But then you get into the other channels and challenges regarding, of course, how do you make those addressable, which is actually a reason why I actually quite like the comparison and the potential lessons that we learned from T2S as a journey, right? Which obviously the European Union's already gone down, as far as banking, regulation is concerned, as perhaps not necessarily something that we want to copy, but certainly where we can talk about, what are the parts that should be the same and what are the parts that are different. And I think if I think about, where we want to see the regulation going, it's taking the parts that need to be different because the technology makes it different. And that might include, of course, items like registration, and then being the same where we actually want to do things like, use for example, the KYC protocols, the ultimate beneficial owner protocols, right, that we use for client adoption and of course for things like investor protection. So it's a really it's a very complicated space. Obviously takes a huge amount of thought, but it's panels like this one, it's conferences like this one, right, where we can bring groups together and talk about what the solutions are as well.
Thank you, Paul. And Bjorn, again, from a sort of international, beyond just the EU perspective, what's your thoughts on how we get more consistency and harmonization? I
find Paul's point very interesting on the current regulatory structure and the CSDs, and we think about that a lot. So I would like to echo that. I mean, our starting point when you really come top down and international above and beyond the European Union, and that's how I understand your question, Kirsten. Yeah, our starting point would be the best setup would be to allow for choice and competition of the client. Be it a B2B client, which is the case for us, or be it a retail client. Yeah, so choice and competition have to be the starting point from our structure. So what we call an open modular network integration, we just frame it under that omni phrase, open modular network integration, because you can then dock onto the parts that you like, use the parts that you like, and leave away others as well. But what we find right now, if that's the starting point, of choice and competition, what we find now is that the current regulatory structure, that does not, or at least not entirely, allow for that innovative solutions in the market space, right? Because the CSDs have a quasi monopole on security settlements, right? And that's maybe something to think about. Maybe that is above and beyond what we can solve here on the panel. But as Paul says, it's panels like these that bring up that discussions and conversations, right? The current structure seems to be hindering the innovation that inherently would be in the product itself, be it DLT or similar things.
Yeah, thank you. No, very good point. And Andre, from your perspective, thinking sort of geopolitical, maybe putting more of a sort of competition angle on it, what's your perspective?
Thank you for the question, and I think it really sort of fits into a number of discussions that we are having on this panel throughout the past hour. I think the very nature of the technologies, the way they are used, the way they are developed, including the products or the assets or the outcomes of the use of it, basically do not know borders in this regard. And I think it is clear when we look at the single market and when we look at how we actually create a workable regulatory framework and an environment across the EU 27. But I think it is important actually to look way beyond that. We have a very special partner just next to us, which is UK, a very important one in this regard. But we also have other jurisdictions such as US or some Asian jurisdictions that actually have an important role to play in this regard. And when we speak about issues like some regulatory certainty and a level playing field, we should be able actually to also make a comparable approach when we speak about what's happening and what's actually sourced from the EU, but also with the assets and products that are actually coming to the European market. I think there was this example of an asset from Banque de France going to the Switzerland. This is exactly a concrete example that we need to be active in this regard. And I fully agree with what has been said on the sort of advantage that Europe has actually right now. And I believe also it's not only in terms when we look at for example, the fintech companies, the startup projects, the projects that are created by financial institutions, but I think it is also in regulatory terms. We are actually in a position where we may be setting standards. If we do it right, if you get it right, and if you get it quickly, we are actually able to set standards in this regard. We were talking about the MiCA regulation, the DLT pilot regime. Those are actually those or even DORA. Those can be actually groundbreaking type of regulatory measures. If these are actually enforced, fast enough, efficiently enough, then can be a good example also for others. And all these questions, I think Lukas sort of referred to it, that the discussions around the former Libra and the DM project, the way how it accelerated the discussion on the European Union and where we are actually today. I think this exactly shows that the EU has capacity to maintain the lead that it has and actually to set standards to the others. So I think, for example, from my point of view, every time we discuss that issues with the European Commission, other colleagues, other institutions, member states, we always emphasize the need for international cooperation. The fact that the EU is actually taking initiative and discuss it properly with other relevant partners on the global scale, so that actually it's clear that we have this coherent approach that is actually sort of based on what we believe is important in the EU, but is also as well shared and shared by other global partners. And I think this is a very important dimension.
Thanks, Andre. And Lukas, maybe if we can get 60 seconds closing thoughts from you, and then I suppose we have to finish with the Innovation Hub, given we're talking about innovation. So 60 seconds from you, and then we'll pass over to Morten.
My God, you really put the gun to my head. Very briefly, a big shout out to the work of the Bank for International Settlement for what they're doing on central bank digital currency. I think it's extremely important to ensure cross-border interoperability of central bank digital currencies. Keep on the good work. Also a big shout out to the FATF, which has been coordinating the world in setting guidelines for how to tackle the anti-money laundering problems for crypto assets. Extremely important for interoperability questions. What I would like to add at the end, absolutely right, I agree with Andre. I think in the area of crypto asset regulation, Europe can be proud to be a front runner. We hope it sets a standard, a good standard, a pro-innovation standard. And our colleagues at the Japanese Financial Supervisory Agency, the Japanese FSA, are reading the MiCA article by article, I was told. So at least in Japan, our example is already being very, very carefully observed. And we have opportunities to foster this cooperation on international standardization around the MiCA inside the International Association for Trusted Blockchain Applications, which has a governmental advisory board where we are sitting with our peers and talking formally about these things. So the INATBA is here a very big driver of international cooperation as well. So thanks a lot with these words for having me. Thank you very much.
Thank you. And Morten, finally from you.
Well, so I work for the Bank for International Settlement. So international cooperation is what we've done for 90 years. So I'm very happy that I don't have to make that argument. Everybody on this panel seemed to agree on its importance and the importance for standards. Completely agree with it. From my perspective, I think two things where I really think Europe is also leading. I think it's on data protection. You know, there Europe is really setting the standards for all. I think that's really important in this new digital world. And then I hope really digital ID is something that Europe will take off forward, because I think that's really a foundational technology or infrastructure for any digital transformation.
Thank you. And with that, I'll thank everyone on the panel for their contributions today. I took a couple of notes. I think the key things for me were harmonization, international standards, interoperability, and level playing field. So that was what I took away from it. I hope everyone watching took something away from it.